Hi, good afternoon. Today I'm going to be going through a couple of topics that I get asked a lot of times about trading. And I get people ask me things like, would $100 be enough for me to start trading? In fact, this past weekend I had someone say to me, tell me, would $100 be enough for me to start trading? And I usually answer that question by saying, yes, that question is a great question, but it is not the first question to ask. And why do I say that? Let's say, for instance, you said you want to have a car. So you want to have a car, and then the next question you ask is, how much fuel do I need in my car? Now, everybody knows that that fuel in the car is a critical component of actually driving the car. But when you're going to buy a car, apart from asking about the fuel efficiency and stuff like that, just asking how much fuel do I need isn't the right question to start with, although it is important to know. So there are other questions you might want to find out if you're going to be buying a new car is, what are my needs? Will I be using my car for commuting to work and back? Will I be using it for private travel to take the kids out, go out for weekends? Will I be moving around my city, or will I be going intercity? How far away will I be traveling with my car? How big is my family? Will my car just be for me, so I just need a small car, a sports car? Or do I need a family vehicle that can take the entire family and take everyone together in one go? Say we're going to an event, or we're going for holidays, or we're going for a visit, a sports car won't be ideal. So those are sort of questions that you want to ask ahead of time before you actually then say, how much do I put in fuel? And then how much you put in fuel as well is dependent on if you're just going to be using the car internally in your city for commuting to work, as compared to if you're going to be driving from one state to the other state. You obviously need more petrol or diesel to move from one state to another if you're doing it regularly than if you're just commuting to work 1 or 2 kilometers from home. And so using that analogy for trading as well, so the question about would $100 be the right amount for me to start trading is a good question, but it's, like I said, it's not the right one to start asking. And so what you want to first of all understand is, what am I trying to do with my trading? So I've got kind of 3 options of what you can choose to do, because that would then inform whether $100 is the right amount to start with or not. And the first option really is, do you want to start earning an income, so withdrawing an income from your trading account shortly after you start trading? So 1 month after you start trading, do you want to start taking some income from your trading account? If that is the case, you need to have a significant amount of capital to be able to allow you to earn a salary or a wage out of your trading account, which means for most people, $100 isn't that amount. $100 isn't significant enough for you to trade in a month and then withdraw from it and still have enough of your principal capital to keep growing as you keep drawing from it. So that answers straight away a lot of the questions for people. However, some people will say the second option is, oh, I've seen some people actually take $100 and turn it to $100,000 in a short space of time. And I say that is possible, absolutely possible. It can be done, and it happens. However, the fact is, as a new trader, the likelihood, the probability of you taking $100 and turning it into 6 figures in a short space of time is very, very small. And so what you will most likely end up doing is blowing that whole $100, because for you to take $100 to $100,000 in a short space of time, it means you're going to be risking your exposure, and your risk in the market will just be too much. And as a new trader, for you to take that amount of risk, it means that you're actually most likely to lose the money. So that's the second option. So first option, have a significant amount of money and then you can draw from it when you're making some profit. Second option, just expose yourself too much in the market and hope that you will make some money from the market. But don't forget that hope is never a strategy. Hope is part of the attitude you need to have when you're running a strategy, but you've got to have a strategy first. And then the third one, which is what I subscribe to for most folks, is this. Because I find that most people that try to get involved in trading the financial markets, Forex, stocks, equity, indices, and all that, most people that try to do that are not yet financially free. And so they are either in a job or they are in a business that they're just trying to earn additional income from. And so they're trying to earn additional income from your trading. So they are still building their financial strength and financial capabilities, which means they don't have a lot of money. Now, it doesn't mean you can't get involved. This is actually where you should get involved, because wealth is built over time, built gradually over time, and not just gambling and trying to make all the money immediately. So the third option, which I subscribe to and I recommend for you, is that yes, you take your $100 on month one, put it in your investment account, trade it sensibly, get anything from 2 to 5% return for the month. Don't push for more than that, just sensibly as you're learning. Then the second month, take another $100, put into the trading account, make another 2 to 5% on it. Do that again third month, do that again fourth month, and at the end of 12 months, you should be at least at 25% return for the year, for the 12 months. And mind you, some of the biggest and the most successful market traders in the world, or stock investors in the world, or investors in the world, most of them average between 25 and 40% annually. And they are billionaires, dollars. And they didn't need to try to do 100% a month, which is what a lot of new traders are trying to do with $100. And that's why you're not making it. You're just losing the money. But if you just focus on returning high probability and trades and returning anything between 15, 25, 30% a year, which the only thing you need to do every month is about 2%. If you did 2% consistently every month for 12 months, you'll be on around 26% return for the year. And that is an awesome result, because no bank will give it to you. Even the stock market over the past decade has not returned more than 15%. So if you, in your trading account, do 25%, you are well above average of what is obtained out there in the financial market. So don't try to be, I'm not sure who are trying to compete with, to do 100%, because a lot of people, or some people, actually tell these stories on the internet, and you just read them and you think it's for everybody. No, it's not. So sensibly take option 3 as the route to how you want to actually grow your money, which is every single month put some money away and also be trading that money. So you're not just putting money away, but you're also growing that money that you're putting away. And I think that's the best formula to actually achieving financial success. Now I'll show you how powerful that is. We will get onto the computer and I'll show you how powerful this technique is. It will blow your mind, because a lot of people don't really know this. It will blow your mind to see how making small returns consistently, match the words, small returns consistently over extended periods can completely change your financial state. You just have a perpetual ATM, constantly pumping money out for you. Initially it might look small, but it will actually grow, as it were. So we'll jump onto the computer. I'll show you a few things, and then we can take it from there. Okay, join me on the next video. Cheers.